a project to kind of take a look at that. And if I'm going to present for a minute, and I'll show you, I just basically pulled the Bitcoin price as opposed, or like compared to gold, silver, and then crude oil. But there's something kind of interesting to show you with that. Hold on one second here.
Wow, Jeremy Cox, impressing, man. The November effect. I'm all ears or eyes or both,
So
I guess.
here it is. If you can see that, that I basically put it on a chart that we're looking at November since 2014. And as I started looking at it, it started with the first like year that I was like, oh, look at the difference between Bitcoin and gold. And normally when Bitcoin is down, gold is up for the month. It almost correlates perfectly. There's only a couple anomalies that you would see, but the one thing that is interesting on the November side of things is that every November, aside from last year's bloodshed, November is an up month for Bitcoin, and historically a down month in gold and silver and the price of crude oil. So things do happen in November, but the November effect is also tied to the January effect, which historically everything does well in January, and then also the sell in May and go away. So those like January, May, and November, I think are months to really be paying attention to, especially in the crypto markets as a whole, not just from a Bitcoin perspective. But the other thing that's just was interesting to me, again, going back and looking at when you see down months, like I'm looking just at September 2017, Bitcoin's down, but gold, silver, and oil are up. And then the next month, Bitcoin is up, gold, silver, and well, crude still up. Like it kind of has this like you can really just see it. Money's leaving the metals and going into crypto.
You can also see that every single August in Bitcoin is down.
August in Bitcoin.
Oh wait, no, maybe is it September? Maybe I was wrong. I'm trying to zoom in on my phone here.
Jeremy Cox, I gotta say, for a guy who had the quote unquote beer goggle helmet on, I'm actually really impressed.
Hey,
it's a tale of two different worlds.
That's all a front. The front is to get your attention. I need you to like stop for a second and be like, what the fuck is that? And then we can have a conversation and we'll talk about, genius and what we want to bring to the table as far as like bringing this kind of information. Because I'll be honest with you, it took me 3 tries to actually be like, I'm just going to put this on a spreadsheet and stop looking at it, because when you look at each of the individual charts, and in the very beginning, just the chart, like I had to kind of play around with this in order to get it to be so, like uniform. But there's no real like, month over month of, this information just sitting on a website. You have to kind of dig.
Hey, Jeremy, let me interject just real quickly on 2 things. I love this analysis, and a few people and I have been talking about performing a similar analysis, and I think this is wonderful. I would like to talk about what it would look like to really expand this and formalize it. And real quickly, the second thing I just wanted to point out is whenever Jeremy said, what would we do if we had $10 million in the bank, Michael Orlando doesn't generally join us for the Coin Genius calls, as he's generally working on the data engineering side of things. But I messaged him. He just joined. And I was hoping that he would be able to take 5-10 minutes to talk about an idea that he and I have been kicking around for a while. I mean, I call it the predictive indicator confidence index, or the PICI. But he and I have been talking about what it would really look like to build this out, what it could start out as, what it could be, and how it could be monetizable and valuable. But, just going real quickly, I'd like if he could talk about that, because his time is really short. But, I would love to talk about this because a few other people and I have been talking about doing a deep analysis and essentially looking at the volume-weighted average price of different assets by day of the week, going back historically, by week of the year, day of the month, so 1 through 31, month of the year, obviously, just basic metrics like that, and trying to answer basic questions like, on what day of the week, given all of historical time, is it the best day to sell Bitcoin and best to buy Bitcoin? And what month is it the best to buy and to sell? But even do that same analysis of all time, but for each year going back to 2010, and seeing if maybe writing a white paper on it, something like 11, 20 pages, depending on how many visualizations were involved. So I think this is just wonderful, really. It's something that I've been wanting to work on.
I dig that. I'll tell you, one of the things I see in restaurants from a restaurant perspective as it pertains to money flow is basically, you know, the 1st and the 15th. And the idea that, you know, when people get paid, those are days to be looking at. Like that's when even just the straight, you know, holders in crypto are like, I'm going to be putting $20 up to $200 a paycheck into some sort of cryptocurrency. And that's
my thesis. That's wonderful too, and I'm glad you said it, because my thesis several years ago was because of the nature of who was involved in cryptocurrency, that there was a strong payday correlation, a seasonality monthly. I suspect that's increasingly becoming not the case, somewhat, but I think years ago that was exceptionally the case.
Mm-hmm. Okay.
But so a day of the month analysis, we could look at that, and that would kind of corroborate that. But, you know, this kind of goes back to also what Jeremy Bourne has described for a long time. He's described regime changes. And, you know, I think there's just been times in the cryptocurrency market where certain things were happening and then ceased to happen, like seasons almost. But
yeah.
Could we let Michael present for just a few minutes and then circle back to this? Not to interrupt your analysis, because I find it extremely fascinating, personally.
I'm already not sharing, so go for it. Go, Mr. Orlando. Welcome.
All right, I'll jump in real quick. Keep it short. So I'm coming at this from a what is possible perspective, from a technical angle. I work with a lot of different tools, and I have a good idea of how difficult certain things are, and how they can compare to each other. I am not an expert on the markets, right? But I do understand the way that the data gets formulated behind them. And I understand when we can have a computer do a problem that is very difficult for a human to do. So in this example, we have potentially thousands of different sets of time series data that show some sort of consistently observed metric over a long period of time, sometimes over different time periods, sometimes with different time granularities. And these time series metrics can be continued to be found into the future. So we have a consistent set of data to work with to begin. The idea is that I know that we're interested in being able to predictively determine what these values might be in the future. And if we're really good at that, if we can tell what these metrics are going to be in the future, generally speaking, you can trade against that and make money, right? The question is, if we have tens of thousands of different time series data sets to go off of, which one could be right? How do they interact with each other? And that's the problem that computers are really good at, because there are many off-the-shelf tools that you can take all of these different time series data sets, feed them in, and say, predict me some values. And the way that you can do it is you can synthetically limit it in the past. So if we have the last year's worth of data, we can feed in data only from 6 to 12 months ago and say, please predict what happened 6 months minus 1 day. And then we can estimate that mathematically and see how accurate was it. And if we do this across many different data sets with many different algorithms, because there are hundreds of different algorithms out there, and there's an infinite number of ways that they can be tuned, we can consistently see how good each algorithm using which certain data sets and what the output was over a period of time. So the idea is that this could be continually run, and we can analyze the effectiveness of how predictive any certain algorithm is depending on what data goes into it. And we can continue to run that algorithm and actually get it into the future. The idea being that then you can have this big set of things that you can choose. You might have 500,000 different options of which algorithm to look at and which underlying data goes into it. But if you can find one that you like and you want to trade against it, you could sort them all and see which algorithm do I want to follow, which one is most consistent, which one is most predictive, which one is right the largest percentage of the time. And then you can follow that, because we could be able to consistently remake that and continually have it predict the future for all time.
So, Michael, let me interject. There's like a few points, and I would love for you to expand on it or answer any questions. So, Michael has described is really great. So, what we were talking about or envisioning is, so on eToro, you can essentially follow a number of traders and see their performance, and it's like saying, I'm going to have what they're having. So whatever, I'm going to put $100 in and make my buys in proportion to their holdings, and I want my trades to be like their trades. What we're proposing is more of a let's have what that model is having, and so the idea would be, I call it a predictive indicator confidence index, in the sense of, imagine that we have 50 traditional technical indicators, and it could be something to do with channels or volume, moving averages, or it could be candlestick formations. I've been talking about like evening star and dojis, each of which has a traditional interpretation as to what the market is going to do. An evening star always says we're about to see a bearish period. So tomorrow there's going to be a large drop in the price. And so I've also spoken about the candlestick pattern recognition. And the wonderful thing about this is that it returns an Excel spreadsheet where each column is one of these indicators, and all it says is true or false for every day of the year. And if it's, the idea would be to take each of these indicators and record or come up with a data set that says how well for the last 6 months or 90 days or 180 days have these indicators been at saying, is the market going up or down? So in the very beginning, I've envisioned a data set where all that we're trying to do is say, tomorrow, is the price going to be up or down? And we can quantify that in a very easily and a very easy to understand way. And but also, not only are we going to want to create data sets so we can see how these indicators are performing, but also models, as Michael has said. We could build sophisticated models that take in different variables, that look at different periods, and start to create a historic record in just saying, is the market going to go up or down? Later, or even concurrently, we could develop a more sophisticated model that's not only trying to say, is the market going to go up, but is the market going to go up $1,000 or down 500? And then we'd be able to quantify and say, hey, this model has been, for the last 6 months, it has been every day, it has been within $100 of the price 90% of the time. And all of a sudden, in a sense, it's like eToro, where we're able to say, how well has this been performing in the past? And for different periods, we could go back and look and say, these indicators for this asset have performed at this performance level. But it might be something, the moving average 200 might be important for Litecoin, 95% accuracy for the last 6 months. But for Bitcoin, it might be meaningless. So in a roundabout way, this is the vision, is that we're going to keep up with the historical performance of technical indicators, but financial models. And I'll let Michael just add on to that and, invite you guys to ask him questions.
I think we should go right to questions. That's probably more fruitful. Sweet. No questions.
Hey, can I make a comment? Hey, Michael, this is Steve Kwan.
Steve?
And I guess, so years ago, a friend of mine created a company called Ditto Trade, and it's very similar to, it's probably the precursor to the eToro model, where it was equity-based, but doing something like the models where it's a more, technical pattern, I think people would be extremely interested in, a la what you and Thomas are saying, because what we found out was, I helped them a little bit with this, but with the I'm not familiar with eToro, so I don't want to say anything positive or negative, but what we found with Ditto Trade is some people kind of tweak the system. They found some weakness where they would get a little commission the more people followed them and so on and so forth, based on they were always right. Where I think something technical and more algorithmic, it's a lot cleaner, and it's harder for someone to, it's a model that you or Thomas or we at Coin Genius build. It's a lot harder for someone to say, kind of tweaking it. So yeah, I'm with you. I think it's a wonderful idea.
So in theory, let's say that there was a subscriber to Coin Genius and they found an algorithm that they wanted to follow. They could go on eToro or on something like Ditto Trade and execute those trades and have other people follow them, right? But at the end of the day, whether they make money or lose money, or people follow them or don't follow them, they still pay their subscription price on a monthly basis to Coin Genius.
Well, think of this as well. There's another angle to this. If you think about eToro and their success, one thing that we have to consider is the social aspect. TradingView and eToro have become successful because they've enabled the sharing of others' ideas to where you could either follow, download, whatever, of these algorithms or predictive models. So we definitely still need a social component to this, and maybe that goes back to Nick Kearney and his thoughts and presentation in Vegas, as he was talking about the customization of each individual profile, and maybe they're adding these these different algorithms or bots to their profile, and holistically you can see how well they've done based on what they follow. The other aspect of this is, if you guys haven't seen the TIE, I can't remember if it's the tie.com, TIE, or just look up the TIE crypto, and then you on Google, you can find their site. But what the TIE did is basically exactly what you're saying, but with a sentiment index and a sentiment algorithm that they put on eToro's platform, and then use the collective marketing power to put out a press release saying the TIE and eToro. Sorry, I'm on like no sleep. The TIE and eToro basically coming together and creating this new following index based on sentiment analysis. So the TIE is a very strong competitor of ours. They've done it right. They have a very basic website, but it's good UI. They have all the sectors already done, and now they're getting into that game. So that's another way that we can go about doing that, is building these things that people can follow even on eToro, and we can be one of those traders. So there's a lot of cross collaboration opportunities here. But the social aspect is something we need to think about.
Yeah, I've been playing with eToro ever since CIS, because they gave me $100 for free on the trading account. And that copy trader, I just looked at it a couple days ago and went through the initial thing. And the first thing that I thought of was that same thing of the idea of copying and looking at someone else's what's the word, like what they're interested in. And it brought me back to what Nick was talking about with what you were just saying, like the whole idea of like a customized page that's like, this is the most important information to this guy who is also seeing a certain percentage of returns. That's the one thing you get to see on eToro, is actually like how their portfolio is performing. So I don't know if that's going to be something that would be available on Coin Genius per se, but at that whole notion of the shareability, and the other thing is that like that the personal, not the personalization, and the ownership of the time spent building your customized page.
A couple things from yesterday. If someone wanted to follow an algorithm through coin routes, we talked to them yesterday, and we could actually program the algorithm, and they could execute via coin routes on our site. So that would be really cool.
Yeah, Tim, that's exactly where Michael and I were going with this eventually. Keep going.
So I feel like I heard this in Thomas's voice at some point, but when you look at something like a monthly return, the statistical way to do that is to look at all of the returns and then do something like a analysis of variance. So there, and then if you look at like 800 million different models, some of them are likely to be good by chance. So there are multiple comparison issues. So there's a few statistical things to do to find like the good versions of these that we can do.
Yeah, and that's something I would want you and I to really do. I think separate a lot of our from a lot of competition is that there is not very sophisticated statistics going on around the world in general. So so I think in the most basic way, the most basic thing though is that without very much difficulty, let's say we chose the top 10 or 20 cryptocurrency assets. Michael and I could start to build out a database just using this the candlestick pattern recognition model that I've talked about. So just using technical indicators and very quickly produce a data set that goes back as far as the trading goes using OHLC data, and return another data set that says, was this indicator found? Did it form in the candlestick pattern in the candlestick charts? And then all what I'm proposing is we take, for instance, evening star. It's kind of rare, but we take all the times that it did form, and we look at the next day. And so the evening star tells us that the next day there's going to be a downturn in the market. And all I'm looking for is if we have 100 data points and 95 95 of those, it correctly said the market's going to go down and it went down. We're going to assign this a 6-month, let's say 95% confidence index or rating, if you will, and do that for all of these indicators. We got like 40 plus some of them right now, and then do it also for, let's say, the top 10 or 20 assets. And we could do it for a couple different, like a 30-day, a 90-day, 180-day period. And I can imagine a user coming and being able to filter. I'm looking at the last 180 days, and I'm looking at this for these two markets. And all of a sudden, it appears on the website or something like that. And then going to what Michael was talking about, okay, let's start to build out some basic models. So, a trader's model might be something as basic as I'm looking at volume, I'm looking at the 30-day moving average, and I'm looking at, a channel formation. And so given these three indicators and these decision-making rules, if these events happen, this is what I do. If these events happen, this is what I do. And I'm just looking at buy or sell and up or down. Just keep it the most basic way. So we're not even trying to predict price. Yeah, go on.
So Thomas, this kind of leads me to an interesting idea. So Tim and I were in New York at Consensus Invest yesterday, and the thing that we heard overwhelmingly is that, if you can create something that is unique to you as a brand, like i.e. there's a lot of people that have different thoughts on the calculation behind market cap, especially in crypto, and a lot of people don't believe it's real, that shouldn't even be a metric. So a lot of people created different metrics. You have people like Nick Carter with Coin Metrics who created some very interesting proprietary things, and when they do that, they become very important to the industry. Number one, as a metric that people follow. So the fear and greed has been done, bull versus bear has been done, volatility has been done, sentiment's been done. So just as is right now, we have nothing that's unique, in my opinion, like comparatively to what's out there. We need to figure out how we can create unique metrics by looking at it a completely different way. One thing I think, and Tim, you can elaborate on this a little bit more, but I think Nick Carter said on stage yesterday, he just said, nobody has really come up with, the unemployment rate. The unemployment rate, everybody knows what that means. They know what the implications are, to the economy when those numbers go up or down, but we don't really have a metric like that in crypto. That's one good example of an opportunity that exists in crypto to say, if this is up, obviously crypto is going up, or if this is down, obviously crypto is going down. So that's just like one of many examples. We can elaborate a little bit further, but coming through with your idea as well, I think there's an interesting thing that we can do from a user adoption perspective. I think the way in which we're going to really make money in the interim is from more institutional and hedge fund clients. I think those are the people that are going to be willing to pay. I think over time, we can build a platform that allows, hopefully, for mass adoption. But you're not going to make a tremendous amount of money unless you have like 1 million monthly active users a month, right? That's just going to take time to get there. So with that said, I think a lot of our focus should be on these institutional clients and hedge funds and building things that we feel that they don't have or that we feel that they need. So just throwing a few thoughts out there just to kind of lead the conversation down the path of how can we actually make money, not just have good ideas, but like how can we make money if those are the people that we think we can make money from.
So the other thing that we heard on that institutional investors of like, if we had this, they would be buying it right now. We talked to Genesis, and they do lending based on crypto. And the way that their business works is that sometimes in an indicator, you might be waiting for it to come to like a propitious value, and then you transact. But they have an opposite scenario where people come to them at whatever time they want to, and they have $10 million of Bitcoin that just came on their books, and they have to know, should I hedge it now, or would it be good for me to wait? And so like a continual forecast tool that works, that works on like a minute by minute or hour by hour, you know, as granular as possible, so that they know what to do. And they would be a huge client, and heard stories like that from different people.
Yeah, so the other thing that I'll add, I'm kind of jumping around here just because you guys said a lot of things. Another interesting thing would be, and Thomas and Michael, you guys can let me know, do we have to create models ahead of time to accommodate for something like this, or can we ultimately create a system that can accommodate for something like this, which is perhaps we just give people a list of all technical indicators that they might be interested in, and more like fundamental indicators like sentiment analysis and different things like that, or developer activity, like all the different data sets that we're talking about, you know, storing and housing from a time series perspective. And maybe I almost envision to where they can literally just take and drag and drop all the things that are important to them or things that they want to test. So we almost facilitate a testing ground. And let's just say they bring in sentiment, they bring in some technical indicators, they bring in some macro indicators, and they kind of drag and drop this into this bucket. And then from that, it creates their predictive algorithm. That's where I think it can get really interesting, because now it is customized to each individual user, and they're creating unique algorithms, and based on the mix, and maybe they can even associate different weights with each of those and start testing, and whoever does the best. I mean, that's how you create a viral social component similar to that of what others have done. Now, I don't know how that's possible.
I don't think these institutions are going to want.
I'm not talking about the institutions.
Yeah.
This was going back to his thing that he was talking about actual like retail users who don't want to come on the platform. So I kind of swapped back, but just wanted to elaborate on the thought there to see how you could actually build something like that.
So I can comment on some of the technical components of that. Building a pipeline that does the collection, the model training, does the model execution, and does that on an ongoing basis is relatively difficult. The first one is the hardest one. Copying that first one and modifying it slightly to work off of a different data set or a different technical indicator, or using different model tuning parameters, or using a different model, that is orders of magnitude easier to do it the second and all future times. So the first one's the hardest. There is some granularity, and the more flexible the first one is, the harder the first one is to create. So it would be feasible to create a relatively constrained pipeline at the beginning and then begin to make iterations on that. That would be a way to save a bunch of time and have a product out sooner. But some of those basic parameters, like having this do predictions in the future on any arbitrary model, sounds extremely interesting and is using the state of the art in machine learning, right? As far as the buzzwords go, it would be using all of the best off-the-shelf tools on this data set, and exposing it in a way that people don't have to spend a ridiculous amount of time becoming a machine learning expert before they can actually do it.
Cool. So just want to stop here for 1 second because we just got joined by a few people, Nick and our first ever quant, Mr. Ram. And Ram, thanks for joining. This actually turned into a conversation about what could we build if we had $10 million in the bank, so we can start looking at and defining our future roadmap. Myself and Tim Hepsel-Sweet just got back from Consensus Invest and had some pretty good insight. We realized that if we want to make money quickly, the people that are going to be willing to pay us to where it can be substantial on our books would be the institutions and the hedge funds, and there's a lot of interest. Obviously, the jump tradings of the world that we spoke to yesterday, and Rob, you already know this. If they're trading with their own money, not as interested because they want to keep everything in-house and they have their own 20 PhDs on staff. So why would they need somebody like us? Maybe we can figure out how to crack that code. But the people that are trading other people's money are always looking for an edge in some way. And that's where I see the massive opportunity for us to create value. And now we're trying to define a roadmap around what could we build in the short, mid, long term to create value for those types of clients, even people like the Genesis that we just talked to yesterday that, these OTC desks that get $10 million, sent to them to be able to purchase Bitcoin or sell Bitcoin. And if they had an indication as to where they should either, deploy that now, or they should hold because it's not the optimum time to buy or sell those Bitcoin and $10 million, and they had some sort of indicator around that, then that would be really powerful for them. So with that said, that's kind of the high level overview. But Thomas, if you want to give Ram also the high level of what you just said between you and Michael and some of your ideas, that'd be great. And then I'd love to hear Ram's thoughts while he's here.
The basic idea would be to take a set of indicators, maybe some technical indicators, some candlestick chart formations, but also maybe something to do with volume and moving averages. And for each one of those, for every asset, let's say the top 10 digital assets, go back in time and say, given the traditional interpretation of each of these technical indicators, what would they have said the price was going to do the next day? Go up or go down? And keep record for maybe a couple of time periods of their performance. Be able to quantify that just in basic terms of up and down. And then to layer into that some more sophisticated models or algorithms, some decision-making procedures. And so that might involve, something like if volume is 50% higher than the running average of volume for the 2 weeks preceding, and if this condition is met and this condition is met, and then whenever the moving average crosses the 10-day moving average, I'm going to sell or I'm going to buy. It could be something a little bit more sophisticated like that. And keep track of these models and their performance, going back historically, but then, of course, updating it every day. So for the past 6 months, every time this chart formation has appeared, it's signaled to sell. And you know what? 95 out of the 100 last times that it did appear, the price was down. So someone interested on selling intraday or on a day-to-day basis would have benefited from this metric, for instance. That's the historical database, and then running performance and creating indicators based on models and traditional just indicators.
Yeah, so Ram, I know we just threw a lot at you, but now that we have you, I'd love to get your feedback on both, the strategy for generating revenue, as well as commenting on the strategy and how that can fold into some of the things that you and I have talked about in the past.
Yeah, so the generating revenue thing, I completely agree with 10,000%. So groups like Hudson River Trading, Jane Street, Jump, they, as you have alluded to, have incredibly bright people. They have a surplus of, Turing Award winners, IML gold medalists, Fields medalists, people who are absolutely at the bleeding edge of their field on staff, right? Like Renaissance Technologies, spearheaded by Jim Simons. All of these guys are very, very bright. So they're very hesitant to accept vendor solutions unless it's from someone of equal caliber. And we would have to first establish that before even approaching them with a solution. Otherwise, they wouldn't, entertain us. They might just out of curiosity do something with us, just to see how we are as people, because they, quants in general like playing games, so that applies to vendors as well. And there's no red tape associated with a shop, which is one of the things that I like. It's not like at a bank where you have to go through 10 million lawyers and go through all this nonsense before actually getting an SLA drawn up. At a shop, because it's such a flat organization, you don't have to deal with any of that garbage. So if they do end up liking us, the time difference between when they say they end up liking us and when they actually sign would be almost nothing. Whereas at a bank, it could be months or years. So that's another thing that's worth considering. But there are, as you've alluded to, quote unquote industrial users who aren't from shops at that level of prestige, and those are the people we should be targeting with these metrics. So I agree there. The thing that was just mentioned regarding the stuff that we'll be showing them in terms of numerical quantities regarding signals, that seems like a fine approach. The one thing that I will say is, given the current research in mathematical finance, the idea is that most assets on the market are a memoryless stochastic process. So if you're using Monte Carlo aggregation on historical dynamics and using that as a predictor for future price behavior, that probably won't work given the current understanding of the way markets work. So I mean, there's no problem doing that. I feel like you could potentially get interesting results, but I would doubt that those would actually yield meaningful positional indicators.
Interesting. So from everything that you've heard and seen and all the things that you like to do, let's just say, once again, I'll open it up to you. You have $10 million in the bank. You hear that, people like OTC desks are looking at when they should buy or sell or hold, right? And you see that these institutions are open, especially if they're dealing with other people's money, to, looking at third-party products and services and data sets, as we've seen. Even ICE brings in data from third parties. What would you do at this point? What would you work on? What would you build?
Yeah. So if the qualifier to that is that I have limitless capital, right? So assuming that I'm a bank or I'm a very well-staffed hedge fund or shop, the first thing I would do is hire a shit ton of PhDs. So people from physics or applied mathematics, stochastic optimization, or real and complex analysis, geometric analysis, formal methods in computer science in particular. I would hire a bunch of those guys. After that happens, the second thing would be, what type of game do we want to play? And what I mean by that is, there's two ways loosely that you can make money on the market, right? You can make money either with precision or you can make money with speed, right? So if you say that deterministically everyone knows that in 5 seconds something will happen, right? What separates performance in that scenario is speed, right? Whereas if there's something that's much more opaque, much more complicated, in financial speak, it's a more illiquid thing that you're dealing with. Precision is of more value, right? So we can say, and loosely, right, most shops will choose one or the other because the dynamics of how these actual executions work vary heavily between a precision-based model like Renaissance Technologies, right? They're driven by long and short positions. They have funds, right? It's a hedge fund, like the Medallion Fund. They recently disclosed their earnings for that. They averaged 66% return over, I think, 25 years. They had the best performance of any hedge fund by a mile. That is a positionally based fund, and they did that just with precision, right? It's a macro allocated model, which usually doesn't work, mind you, which makes it even more impressive. The speed model is what most people use today in the professional world. Is they will say, hey, look, I will generate a strategy such that regardless which way the market moves, I will make money, even if it's an infinitesimal sum of money. But because my execution rate is so high, even if I'm making 10 basis points per trade, if I'm executing 150 million trades per day per desk, right? That's not a small amount of money. So it kind of depends which group we want to service, right? So now we're extending that model to us as a vendor. Do we want to service speed-oriented shops, or do you want to service precision-oriented shops? That's an ideological question. To be honest, both of them are, interesting. It depends. I don't know. I have no preference. So
I would say
so
precision.
The answer is,
I was going to pick one.
the answer is clearly that we don't deal with prop shops who are market making, and in terms of Renaissance even, their public facing entities don't have anywhere near that kind of return. And that fund hasn't been investable for over a decade. Two Sigma has $60 billion, and they don't do that. I know people who do nothing but onboard new data sets from outside vendors there. Millennium is the same way.
Yeah.
I mean, so we don't need to deal the budgets and the precision necessary to be a vendor is much lower.
I would also comment that from what I've seen on the team so far, from technical capability, I think that we're much more capable at relatively low speed operations. So the precision, we don't have a bunch of FPGA developers on staff in terms of what's capable to be done right away.
Yeah, okay. That makes sense to me. We're all on the same page there. So we're targeting precision instead of, and these aren't mutually exclusive, right? I just want to, that's a caveat. But just because that's the typical model that people will have, you know, so some groups like Tim just mentioned, Millennium, Two Sigma, they're huge, right? You have Citadel, these are very large funds. They have speed-driven operations, they have precision-driven operations, they have a pie, right? A wide set of things that they're doing. But I think what Michael just said is kind of the deciding factor for me is just our current scope of people are more suited towards precision-driven algorithmic design than, you know, optimizing the living hell out of algo executions, which requires assembly developers and people who are familiar with extremely low-level esoteric kernel stuff, which is a more nuanced and harder to find skill set than, you know, there are a lot of ML guys that you can find who will be very good at making precise models for forecasting time series data. So that makes more sense to me.
Can I add something real quick?
Yeah, Steve, I was going to say,
I think,
you might want to jump in here.
Yeah, Ram, you're definitely one of the most eloquent speakers that I hear in this industry. But I think, in a nutshell, you have to decide who the target market is. Like, are you looking for a macro fund that is kind of more discretionary, where their trades or their positions are monitored on a daily basis? Or are we looking for a market where the people are updating their positions on a 1 second or millisecond or hour? Like, they're very different, I guess, target markets. Where myself, it's far more of a, I monitor things on a daily basis, but something really has to move for a position to be reallocated, where I know that's not the norm anymore. So they're very different types of research, and I think a la what Ram is saying, it's speed versus precision. Like, I might be someone who makes 500% on one trade, where there's someone else that makes 1% on 500 trades. Is one better than the other? I don't know. Couldn't tell you. But they're very different types of data sets. So I think that's a decision that Coin Genius as a whole needs to kind of make. Like, is this for a retail trader who's, wants a general area to buy $100 of Bitcoin Cash, or is this these data sets that we're selling to Citadel or Izzy Englander or blah, 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 where you basically have one client and you end up getting bought out by that client? So that's just my
I don't think that it's mutually exclusive in the beginning. So a lot of what I described would be a foundation for these more advanced algorithms.
Hey, Thomas, we can barely hear you. Sorry. You can get a little closer to the phone.
I was just saying that I don't think the two are very mutually exclusive, in the sense of what I was describing would be very foundational and could be a building block to larger, more sophisticated machine learning algorithms projects. You know, and I think what I described at the very beginning, that would be appeal to a more everyday trader, a new trader, your average non-institutional trader. But the insights generated from this type of analysis, from this type of data set, would be profitable going forward in building. So we do have numerous asset classes, different large time periods, and lots of data, macroeconomic data, sentiment data, generated data. And, you know, we are dealing with a different animal from most equity or other asset classes. Yeah. So I guess I envision what I'm talking about as an extension of the website capability and a building block. But what I'm describing, I think it would appeal to your everyday trader, your novice trader, people who don't have machine learning algorithms at their disposal or don't feel comfortable using algorithmic trading. But at the same time, it would be a foundation upon which to give lots of direction and insight into making these algorithms and machine learning projects that would be a differentiator.
No, definitely agreed. So there's a lot of different rabbit holes we can go down right now, but I think how I see it evolving is, I think we're ultimately, I mean, if you just looked at a basic chart and you had two lines and, one was going up slow, one was going up quicker, you would see that the one that was going up slower would be the capital that we'd be able to generate from these more, let's just say, high net worth individuals to sophisticated traders, right? Because we also talk to a lot of family offices that have a ton of money that are dipping their toe into crypto, and guess what? They know nothing about it. So they're almost should be treated like a retail trader, and they're looking for any edge, right? But I think over time, if we build a site that's of value, we have solid metrics that are proprietary to us, they're unique, and they become a guiding light for not only retail traders, but institutional traders, just like we've seen on many just regular sites like Coinmetrics, like CoinGecko. I mean, a lot of these institutions, they actually look at those metrics, right? Maybe they're not paying for them, but they take into account what they're saying. So I think over time, if we build something of substance on our site, eventually the money will be generated more so by our retail clients through subscription-based services. But I think that's just going to take time, right? So if you look at maybe, mid-level sophistication of traders as it relates to family offices, as it relates to, I mean, even think of Sublime, Rom. Sublime, for all those who don't know, is a large crypto hedge fund, and they tested some of our earliest predictive algorithms, and they still are in the same boat of, I would test anything that you guys have, and if anything gives me an edge, I'll pay you for it, right? So they're always looking. And the second that we can come up with something that they would pay for, we have a client on the books. And if we have one client on the books, we can say, let's go to the next client, the next.
Jeremy, could you give a short?
We just need to figure out. Yeah, go ahead.
Could you give a short description of the outcome of Sublime testing what was done before? Like, why did they not begin paying us $1 million a month? Right.
Right. So from the LSTM, well, actually, you know what? I think it's better that Rom describes it.
Yeah, so we sent over the original LSTM RNN that Sam built. I don't know if you met him, over to their, I don't know what to call him, I guess chief quant maybe. And he analyzed it, and basically the idea is that it was accurate on days of low volatility and extremely inaccurate on days of high volatility, which makes sense given how it's designed.
So right there, though, that's where I'm talking about is I'm really interested in interactions that meaningful. So we would be able to say, to measure volatility, to measure volume, and have a algorithm that is optimized for those conditions. And then to monitor, let's say, volatility and volume for different asset classes. What you just said may be true of Litecoin and Bitcoin, that it performs well at low volatility. And for other asset classes, it does something different. That's, I guess, what my vision is. Take the top 20 assets and take a couple certain market conditions where behavior changes, but it's still predictable. And all we have to monitor are these 3 or 4 conditions: the asset class, the volatility, and let's say volume. And based upon those combinations, now we choose this algorithm, and under those conditions, it performs like this.
Yeah.
Sorry to interrupt you, but that's just,
no
I'm
worries.
glad you said what you said.
Yeah, you're alluding to, I'm not sure if you were on, there was a call where I was basically explaining to the interns a long time ago on the way people like quants actually trade today in capital markets. And what you're alluding to is basically what people do today. It's more sophisticated, but the idea they use an underpinning on a mathematical model called the Markov regime switch. So basically what that is like you described, right? If you have an asset that behaves a certain way in a certain compact set, right? And by compact set here, let me delineate it by some quantized metric of time. So for easiest, let's just say it's by second, right? And then I say in 10 units away from this compact set, I have another set of time series data, right? And whatever dimensionality. It could be the same asset, right? It could have the same name, could have the same ticker, but the behavioral dynamics could be entirely different, right? It could mathematically be a different entity. So what people do is they initiate a regime switch, constantly monitoring every asset and every basket of assets that's being manipulated, traded, executed upon. And whenever there is, they detect a switch in the regime, the algorithm that's actually executed for generating the orders on the order book changes. So that's the way people actually trade today. So it's not like they have like, an algorithm that they're using for everything, right? That's extremely impractical. So what they'll do is black swans typically trigger regime switches, right? Because today, the model that people use for trading assets is based on martingales, right? So a martingale is I don't know what the math background is of everyone on the call, but a martingale is a type of Markov chain that has unmoving expectation, right? So it's a special property that allows you to model things in a certain way.
Yes.
And
yeah, I'm familiar with Markov chain, Monte Carlo simulations. Not my strongest, but I have had coursework and professional experience working with these. This is definitely where we need to be.
Yeah. So what you're alluding to is the way people operate today, and we should get to that stage if that's something. If we're exposing, like, say, a sentiment score, right? It should be regime based. It shouldn't just there shouldn't be a flat algorithm for each asset, right? It should be based on the dynamics of the asset and chooses
I've
the
loved
algorithm
everything
dynamically.
that you've said. I really, really appreciate you injecting this level of sophistication into the conversation. This is like a fantasy of mine when it comes to cryptocurrency and data science, is to be able to have a team and direct its energy toward this, specifically in cryptocurrency, because it's such a nascent field. I mean, you're exactly right.
So Ram, here's where the opportunity is, and this kind of the reason that I'm having this conversation is to kind of bake out exactly the direction we need to head based on my hypothesis, which you guys are proving out that is going to be correct, which is it's actually not the most sophisticated hedge funds or the institutions that we need to go after. It's the semi-sophisticated trader, or even a sophisticated trader that came from capital markets that just is getting into crypto. They all need help, and they all need exactly what you just said. So Ram, you see that rampant every single day in terms of people understanding what regimes are and switching the algorithms based on the different regime. I know I've been talking about this for quite a while, and that's kind of where we started at CoinGenius. We just haven't got there yet due to lack of funding and lack of availability of certain people. So now that we're here, I think that's what we should be talking about. I think it's clearly defined that that is our target market, because those people, even the family offices Tim and I just talked to yesterday, they have no idea what they're doing. And not only would they invest in us, but they would want something that's somewhat customized to the assets that they're holding or trading. They just want to know when to buy, when to sell, whether it's signals, et cetera, or some of the things that Thomas is talking about. I think the opportunity really is there in crypto, more so than you probably think, because obviously you're not in the crypto world every day. But more and more as we talk to these people, I think it's really becoming very clear that there's a tremendous need for some of those things. And if we can bridge the gap, between capital markets and crypto, and bring this level of sophistication to the people that will never have it, because still that stays within the top 1% of all the hedge funds and all the people that have the 20 PhDs on staff. What about everybody else? So how can we bring what those people have to market so other people can take advantage? And I think that's where we can win big.
Yeah. Well, I mean, loosely, one thing that I've learned just through my interactions here, Jeremy, is, my conceptions of what should be done or the way things should be done are not necessarily the best ways to approach a startup because I've only worked at organizations that have limitless resources, right? So you can't, afford to just wait 2 months for a deliverable, right? Whereas at a hedge fund, you can easily do that.
Right.
It can be like take as long as time you need, whatever resources you need to build your stack.
Yeah.
So, that's something I think is also worth considering, right? We shouldn't approach a problem that might be very profitable in the long run, but it's so sophisticated it'll take years to implement properly. We shouldn't do that either.
Agreed.
So, yeah, there's a middle ground there somewhere.
So that's perfect segue. So I started this conversation. Hopefully everybody can stay on a little longer. I think there's another call after this that's basically going over exactly what we're talking about now, how to automate Steve's brain, Thomas's brain, Rom's brain, right? So I opened up with the question of if we had $10 million in the bank, what would you build? Hopefully to back into some really good ideas, which I think we have, just scratching the surface, to be honest, because I know Steve hasn't even interjected and say, well, if you got to automate this, we could get ahead of things, even though, we've talked about that on a few calls. But now let's kind of move that into how can we streamline some of these efforts into building something quick, or at least build the groundwork or the foundational elements that would allow us to get there, but also build things that can create value along the way that we can start selling or putting on our site to show we know what we're talking about. And I'll open it up for anybody.
Can I add something?
Yeah, please.
I would. Okay, my last comment might have been misconstrued, but I feel that essentially just categorizing what data and what research we want to, I guess, make available for purchase to various types of traders, investors, as Rom and Thomas have pointed to, you do have people that are going to want to run algorithms and try to, make something in a millisecond, a minute, a short period of time, for lack of a better term. You're also going to have a more discretionary person that would like more thought of, well, Bitcoin Cash may outperform over the next month because of A, B, and C. And I think that there's not a lot of places that offer a wide, menu of various data and research, where one is a la carte for the very short-term person, one is more for the institutional longer-term person. And I think that all the people on this call, many being in data science and very good at looking at huge data sets, could make those different type of menus, for lack of a better term, available to people, where not everyone is going to be Thomas, you kind of know what I'm saying. Like, I think you.
Well, hey, Steve. I mean, just think
Yeah.
about this. I did a lot of I spent a year of my life producing market research for an employer who turned around and sold anywhere from a 10-page market research report to a 300-400 page market research report, and charged anywhere from $500 to $40,000 for that document in niche areas and in general areas.
And you just hit it on the head. That's the market. Like you said, there's going to be a wide variety of people that want something. And what Thomas just said is exactly it. There's someone that wants to pay $20 a month and kind of get the minimalistic research and data. Then there's going to be someone like a fund or family office that might want to pay $500,000 a month and get a one-time report. And I think that being a startup and being young and having a lot of flexibility, that's what we could offer. It doesn't have to be one type. Thomas just said it exactly what I guess I've been, is somebody wants to pay. What do you want to pay for? Because we can script it that way. You want a 5,000 page report on Litecoin? okay, well, let's start writing it. You want a report on which algorithms and which sentiments are, okay, let's work on that for them. Like, I don't think we have to make the decision. Ultimately, let the customer kind of make the decision where we have a little bit of everything out there for, I guess, samples, but if there's a major interest in one area, then let's focus on that.
Yeah,
Well,
I
Steve-
think that's, if you look at our website, I added a consulting section specifically for that because we realize whether it's a family office or even a hedge fund, they're all wanting research, right? Yes, they have their in-house research as well, but they tend to go outside for research. So on the consulting arm, that's something we could definitely lean on. Keep in mind, we obviously have two products that are out. One is our site, which we just launched yesterday, if everybody saw. So that's the first iteration of the site. Hopefully that'll establish credibility. There's already people tweeting about it that we don't even know. One VC specifically just took a screenshot and yelled out to the crypto world saying they're live. So there's been a lot of people that have been following us and waiting for us to finally launch, and we're here. The second thing is we have the notifications live. So we have over 300 subscribers already to our notifications, including a lot of you guys on the team. We're putting out some notifications on a regular basis. We need to make that a little bit more regular. And then we also have Thomas's version of the automated technical analysis as the, formations of those patterns exist within the candlesticks, and it automates an alert. And that can be maybe the next level of the alert. So these are things that are real that we can monetize on now. I think what I'm hearing from everybody is the best way to monetize for the family offices or hedge funds would probably be something that's a little bit more customized based on their input. Is that fair to say?
Here's one thing, yes, but that's definitely Steve's point. But here's the cool thing to consider is scalability of a lot of these these reports. This is what I like about R in both Python. So a lot of what I've done as a data scientist, being paid to do just basic analytics, is reporting. So I'll have frequently a client, and they'll have a couple of data sets, and they normally want these reports to be regularly produced. And next month they're going to have the same data, but it's going to be different data, or they're going to want to add more data to the report and see how it's changed. I frequently will write a script that I can rerun, but it's a markdown script. So it's producing something like what you would see on a website, but in a PDF form. And I use templates that are used in academic journals, statistic journals, and they look good, or they're double columned, and it will write this text, and then it'll have this chart, and then it'll have this table. And what's cool is, imagine I wrote one for Bitcoin using OHLC data and our Twitter sentiment data set. I could, as long as the data from Litecoin is similar to that, and it's the same structure, I could turn around and just run Litecoin through it. And even the written text that I've generated, it would swap that text out. So I can use inline code. So, and I had a past career as a writer. So I've come to where I can write these reports in such a way that, hey, the client names that are going to be mentioned here might change. So, if I'm trying to say the most revenue last month came from client X, and I know that next month the largest revenue might come from client Y, I'll put a piece of code in there so that if it's if client X is the largest, profit generator, that this month, but next month it's Y, it will swap that out without me having to go back in and type and search for it. So we can literally write even written analysis in such a way that it'd be automated. So if we had a report like this, we could swap out Bitcoin, Litecoin, the top 20, the top 50 assets, and run the data sets through them, and it would automatically generate a high quality professional PDF report, or even an HTML page.
That's very cool. Hey guys, I just got a text from, I don't know if you guys remember, I think all of you outside of ROM were in Vegas. The gentleman that committed the 200,000 came up front, just texted me and wants to get on. So I'm going to run. You guys continue. This is great conversation.
Jeremy, $1/5 can wait. Listen to me talk about our program.
Do you want to keep working on this project? I need more money.
Yeah.
So,
Okay. I guess.
I guess go get the fifth of the million.
Get the
I'm
money.
gonna go get that, but you guys keep going. This is great. And,
Awesome. Take care, Jeremy.
awesome. Thank you guys. Bye.
Take it easy. Hey, Rom, are you still online?
Yeah, I'm here, but I have to leave in a bit. But
Well, could you comment on what I just said and what Steve said, and just, if you only have a few minutes, just please add whatever else that would be valuable. I found what you said to be incredibly insightful, and I'm glad I wasn't paying tuition for it. Yeah, just and then we can finish up talking after you're done.
yeah, well, I think, like I said, my experience has been too esoteric to apply a general statement, right? I've just worked in very niche fields. But I do think there is some value in the PDF thing that Steve was talking about, like some sort of a consolidated market report, or say something like a research thesis even, where they're like, do a case study analysis on this basket of entities and tell me things that you find interesting about it. And you send it to some group of people and they choose what to do with that information, and they can use that research to create their own proprietary whatever. So yeah, I think that potentially could get quite far depending on how we go about doing that. The problem, like I said before, with approaching a lot of these groups is they're very picky, and they don't like accepting black box algorithms, right? Because a lot of these people are mathematicians. They like purity, they like reproducibility. They don't like some black box machine learning thing that they have no idea what it's doing, right? So we have to definitively prove beyond reasonable doubt that if we are giving them that it works at a very high degree of success. So I mean, there's a couple things that we have to consider, but I like the direction in general.
Rom, two quick things. One, Renaissance did some, or continues to do some high frequency trading, and that entity that is not publicly available, but they started institutional equities and they started institutional futures. I think they saw the challenge. They thought of it as another puzzle, and I think that may be the analogy that you can think of here in terms of how to what our roadmap might be.
Yeah, I agree. And the last thing also, which it definitely is very important as well, is it's not just about profitability, right? What all would everybody most enjoy working on, right? I know that sounds sappy and all that, but since we are a startup and we have the latitude to choose what we'll do, presumably we should be pursuing things that interest everybody, or the vast majority of people on our team. So I think that's another thing we should consider.
Without changing the subject too much, but I know that I talked about it with some other team members on another call, but to me, it's like that $10 million idea. If I had $10 million, what would I build out? It would be a way to actually visualize like where money goes out of. Like when people sell out of Bitcoin, the easiest example is that the moment that Tether starts going up, that people are selling out of their cryptocurrencies to protect it into a stable coin. But it's like if you got more broad with that and you were able to actually see almost like how the whale alerts are watching just the Bitcoin addresses, it's like all of these addresses are moving cryptocurrencies in and out of them. But where do those go? And outside of crypto, does it go into gold? Does it go into oil? Does it go into the NASDAQ? Does it go into the Dow? It's like that would be something really interesting to be able to look at from a high level perspective of like actually watching that money move in real time in one place. But I know that when we were talking about that, that's a pretty complicated thing to actually like work on, that you'd actually be able to see all of those different markets happening all in tandem. But from a individual trader perspective, I think it would be very interesting to be able to see.
So hey Jeremy,
yeah, go ahead. I'm good. You there? Can I continue then?
Thomas, you're muted if you don't know that.
What's that?
Thomas is
Oh.
muted if he doesn't know that. It sounded like he was going to say something, but he's muted.
Yeah.
I would say go ahead and continue, Jeremy.
It's just.
Sorry. Well, no. Well, I can. Let me interject real quickly. So to do what you're trying to say and to replicate in a more sophisticated way what Whale Alerts is doing, we're going to have a really great view of the blockchains and multiple blockchains. And, you know, so this is the difficulty is it comes with exchanges. So generally, you know, if I send one blockchain amount from on my blockchain to another blockchain, we can monitor that easily. And this is one of the things that Whale Alerts does. They look where money comes onto the chain from cold storage or comes onto the chain at the exchange. So imagine if we had all these exchanges, if we could identify the exchange wallets that hold these, because Coinbase, they don't have a wallet for me. I have a wallet address, and so they can keep track of maintain. Either they have a wallet for me, and they deposit in and out of it from their wallet generally. So like if so one of this has to come. We have to have a better understanding how they hold client custody wallets essentially. But if we had a list and we could identify, hey, this is the Bitcoin wallet that CoinGenius is using. I know there was that one exchange in Canada that had a huge fiasco. There's still, you know, the owner died, and they're talking about $150 million, $250 million worth of cryptocurrency was locked away, and they didn't know where the private keys were. Ernst & Young, their blockchain segment was given it. But, you know, on one blockchain network, yeah, we can monitor and visualize through network analysis and visualization really well. I think the hard part comes from blockchain to blockchain and seeing the interaction between these, and the fact that most of these large movements do occur on an exchange. So we can't exactly use traditional analysis to find that, because I'm putting an order in, and maybe Binance or CoinGenius, they're buying and selling out of the same wallet. So, you know, so they might, just the way that like the market making works. I think in order to do what you're saying, we would have to have a much broader understanding and theory of how exchanges are working and how money moves in and out of their wallets and client wallets.
Yeah.
So that's just a brief ramble of how I would approach that. But on any blockchain, single blockchain, we can monitor that.
Yeah. Well, I mean, that is the bigger, like the really complicated question would be like, we're only talking blockchains and wallet addresses, but then it's like, where do, you know, because for the here and now, a lot of the money is, for all intents and purposes, people that are trading in crypto are staying in crypto. It's like when that flood comes, that people are potentially going to be selling out of gold and going into Bitcoin or whatever other cryptos there are. You know, again, it's thinking out loud, and it's that, you know, that dream of like a $10 million idea, but to think like a dream of being able to watch it actually move in real time and say, oh, okay, because on a side note, that I just talked to somebody recently about how when the next like serious bull run happens in cryptocurrency, you're going to see people that are going to potentially want to buy Bitcoin Cash because it's cheaper, and they don't understand the whole cryptocurrency space. But it's like, why do I want to buy something that costs at, you know, so let's just say it's peaking at $20,000, when all of a sudden this one that says it's still Bitcoin, but I can get that for like 300. Why don't I just buy that? You know, and so the idea of like the speculators and the people that the FOMO in are going to be going there. To be able to actually see that happen would be just, that would be like a dream, because then you're like, all right, let me follow that in, or even better, short it. But again, I know we talked about the first time. It's a complicated thing. I would say it's even more complicated when you take it again outside of the cryptocurrency space and exchanges and wallets, that it's like where does it go into like, where are the hedge funds going? Where is the institutional money moving their funds out of something when the stock market's crashing, or when yada yada, any market is having a massive like effect. I want to see what just got sent. Hold on.
It's pretty cool looking.
Oh yeah.
Yeah, this is something I've had in my back pocket for like a while now, where like I would love to see, I'm very visual, so like the movement of where things going and where are they ending up in a A to B dot with a line, and maybe the lines are different kind of colors or dashes or dotted based on what kind of trade or size or activity it is. And it kind of like, it's like a hybrid between almost a living timeline in real time on a short micro scale and events and triggers, very gamified in a way where you can see things happening instead of data.
Yeah. When you say that, I dabbled. I played in Forex, and I only played with like virtual accounts. I never went live, but got such a kick out of watching those pips and literally just kind of like being able to like correlate the price of oil with the value of the US dollar and the price of gold with the value of the Australian dollar, and actually being able to like see that happening in the Forex markets was pretty astounding. And it's like that whole thing of like, we are moving into gamification and visual people that live off of visuals. It's like you don't want to be looking at a chart. You don't want to be looking
instant culture is where we're at. And if you look at this image, and you can almost imagine like the left side and the right side both being configurable. We're like, all right, I need to know about gold, I need about this, this, and this, and then I need to see where it goes on this, this, and this, and then something in between. A lot of potential to kind of make this a lot more elaborate.
Yeah, that is very awesome, man.
Yeah, ideas.
It's like our own Coin Genius think tank that's happening,
Yes.
Nick Kearney.
It is.
My man.
Hey, I got this is actually, I wanted to ask you, since Las Vegas, it's actually something I heard you mention over multiple times, where you would mention Ethereum and the price versus how many developers. And now I know obviously GitHub comments and all that, but I would love to hear, and this isn't really a trade base, but how does Nick Kearney measure the developers' work? For instance, on Ethereum, where that is something that I've never heard anyone really talk about, versus they have a lot of commits, or there's a lot of people looking here. Okay, great, dude, everyone can see that. But if there's a different metric that you look at, I think that's something that could be of major interest to a world and plethora of people. So,
there's definitely a lens that I look at things through, and as a programmer, as a developer, as most of us are, programmers and developers, or even financial developers. If you're not coding, you're still doing it one way or another. I was like, you kind of know the difference between a team and a passion project, and someone that's just there for the paycheck, and all these things. You can look at a dev team, you can see their commits. Okay, are they making a lot of commits? Well, what kind of commits are they making? Are they just going through the motions? Are they sticking to a roadmap? Are they all coming into work super passionate about this? I guess that's kind of like, look at us, like this call right now, like none of us need to be here. None of us are getting paid to be here, but like, this is our dream, our passion, right? Like, so if you can identify that, that's part of it. The second is like the actual token in which they're building. If they're building a token that like can be used for other things beyond just their immediate like functionality as like, whatever, that's kind of what I look for. Like Ethereum, for example. Like Ethereum doesn't have a sole purpose except for other people to use Ethereum to build their own things, right? So like that's what I look for, because then all of a sudden one company with 100 developers, if they have 10,000 different companies using Ethereum as their base back end of their software and their application, now Ethereum just essentially became 1,000 different companies. Yeah, most of them are shit, but You know, you have a couple game-breaking apps that change the game. All of a sudden, maybe you have even like a Facebook level app where there's over 1 billion people using it. All of a sudden, there's 1 billion people using Ethereum. So those are the two things I look for, like developer commitment and passion, and then the actual like use case of a protocol token that is going to be scarce as a commodity and useful as a commodity in modern day oil, to power all these different apps. So, and then when you have something like that, that's when exponential value starts coming into play, where all of a sudden, if Facebook was built entirely on Ethereum, say they launched tomorrow, they're like, all right, Facebook's completely on Ethereum now. Now you have one app that's worth more than the entire market cap of the entire cryptos combined. Because we're not just looking at the crypto market cap or this coin's market cap. We're looking at all these different industries merging their market caps with the crypto market cap. So if you have a healthcare industry with, let's say, like $1 trillion market cap, and then it decides to merge with the blockchain, all of a sudden that blockchain market cap's irrelevant because it just got engulfed by this new bubble of a way bigger industry with way more money, but now it's adoption, right? How can we predict that? What industries and what companies are going to start using this tech, and that's going to expand the volume of not just the price, but like the people that are actually using it. Mainstream adoption, basically, is what I just explained.
I was listening to a YouTube video yesterday or the day before that was talking about Ethereum as it pertains to XRP, and the fact that what a lot of people aren't talking about it, but there's a lot of Ethereum like functionality or what have you, like either the something about how if XRP takes off, then or like either or, like Ethereum and XRP are going to help each other, and that's very exciting because everybody still like talks a lot of smack about XRP, but at the end of the day, it's a banking coin that has a lot of traction.
Yeah. Well, the good analogy is like, okay, like Coin Genius. Right now, we have all this great stuff, but we're not like worth anything because no one's really using us. But what if like within 1 year, every hedge fund in the world is using us and every trader is using? All of a sudden, we have, millions of users. We just became It's like the same thing. Like, how do we like predict which coin is not just going to be successful in price, but is going to be successful for the developers? Like, for example, if you pulled up like most popular programming languages 2019, it's a common Google. I'm sure we've all Googled it before. And you're going to get a list of what, like, it goes like JavaScript #1, and like PHP, and then blah, 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 blah. And it'll show you like the percentage of usage. Like, if you replace that list with a list of like what coins are being actually used in a production environment, not just people building crypto cats and not just people like making like IPOs, but if you can figure out, okay, this person's making a very useful dynamic application for this or that, how do we predict which coin? That's what I'm looking for. I'm investing in coins in which I think the coins are going to be very useful in other projects. You can invest in, Ford, or you can invest in oil. Like, oil is used by every car company. Ford is just Ford. So I don't know. That's a really rough example or analogy of what I think crypto is. I don't think crypto has anything to do with the prices we're seeing today. I think the prices we're seeing today are completely irrelevant. Like, they're just a bunch of people who actually do not understand the code, do not understand the use case, and do not understand where it's going as a technical like program. And they're just putting arbitrary numbers on things. Oh, there's this many coins, there's this much, and if it goes up this much, and then all these blah, 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 blah. That doesn't fucking even really matter, right? It matters right now, but not in the long term. Like, when one of these apps breaks through and gets like 100 really successful apps built on top of its protocol, that's where the money comes from.
Yeah, amen to that.
As I got to jump off in a few minutes, are there any other insight that you want technical insight from or anything like that?
I'm good. This is a good call.
Okay.
I know we have an agenda.
Yeah, good stuff. Lots of interesting things here. I'm gonna jump off for now, but as always, if you need anything, ping me in Slack.
Michael Orlando, it's always a pleasure.
Always a pleasure. Thanks, guys.
Take care, guys.
And
Bye. Bye,
Enjoy the
Steve.
rest of the day.
all right.
Bye, Jeremy.
Bye-bye.
Hey, Nick Kearney, I got
My man.
To echo what you said about, I guess when I first heard about crypto, and this is not trade related, this is not technical, but you know, it was another option, I guess, for some way of storing some value. Now the comical thing now is when people get nervous in crypto, supposedly, when you know the shit's hitting the proverbial fan, amazingly they go to something called Tether, which is supposed to be a proxy for the US dollar. So in times of nervousness, they left the US dollar to get different exposure, but now they go right back into it. And I guess kind of what Nick was saying a little bit is when you see that stop, that's when people probably understand the bigger picture a little more. That's just my opinion, though.
Yeah, I mean, think about it like this. Say we're all a team of developers and there's 100 of us, and we go into the office from 5 a.m. to 5 p.m. every single night. We're busting our ass. We're giving us our all. Jeremy says, hey, this is what we're going to build. It's this revolutionary new protocol token. It's going to change everything. And we all buy in. We all believe it, you know, right? And so tomorrow we come in and some dude on some exchange says, hey, our token's worth $100 today. We're like, woo, that's great. And then we come in tomorrow and, oh, our token's worth $50 today. It went down 50%. We're like, oh, no. And then like that happens and it happens and it happens. That doesn't change my underlying belief of what Jeremy told me, that I believe this token is going to change the world and be super useful, right? So regardless if they say, hey, it's worth $1, worth $100, I don't give a fuck. We're here every day grinding, writing this code, and we know this token is going to be useful. That's the value, you know, not the number of someone outside of our room and outside of our bubble that's not even on our dev team told us our token's worth based on some kind of whatever. You know what I mean?
I do 100%. And there's the thing is, what I've realized is there's really three types of, I guess, token, coin, whatever project you want to call it. There's what one calls a stable coin.
Right.
Stable, why? Because we all assign it a value of $1. Like you said, people assign it a value of $1 US. Then there's something like Bitcoin, where it's a means of value, where someone says, oh, here's $9,000, and it's widely accepted because it has so much liquidity. The third thing is there's a project. Like I've said, there could be a coin genius coin, but it would essentially just be a way of raising capital. And that really has become in my opinion, one of the biggest uses of this, where I see so many coins per se that really will have no actual use. I mean, I can't tell you, I've probably looked at 50 projects where their servers hosting coins, that, where it's like it has a market cap of 50,000, 100,000, but essentially that's it. Like,
and those are the coins I avoid.
Once their hosting is done, once no one wants to host those coins anymore, what happens? It's done. It's zero.
And those are the coins that are the opposite of what I just described. Those are the coins I don't touch with a 10-foot pole. The one-offers. They have a very specific functionality within their ecosystem that doesn't apply outside their ecosystem, or no one can build on top of. Basically, I'm looking for a coin that's essentially a coin version of an API, right? Or some kind of SDK in which I can use your set of tools to build mine, right? It's like, yeah.
I agree 100%. And that is becoming
now, there is
downfall.
There's exceptions like Bitcoin, Litecoin. There's a few other coins where the movement and the momentum is so strong that they're valuable standalone currencies, digital currency.
Those are your currency. Their value is their liquidity. I know it sounds goofy, but there's two layers, and anyone who, I'm sure Thomas, anyone else, familiar with capital markets, there's your screen market that you see on Binance. Oh, it's 87.10, 87.20 for 2 Bitcoin. Then there's your institutional market that's not on the screen, where they might be, we're 8,600, 8,800, we're 500 Bitcoins on either side. Then there's your massive market, you know, like your mega institution where it's like, we're 8,000, 8,000, 9,500, we're 10,000 Bitcoins up. And you don't see that where that's kind of the problem when everyone wants to be a use case, a coin to be paid with.
Yeah.
If you don't have 2 and 3 layers of bids and offers, and everyone's trying to essentially hit the same bid and offer stack on one exchange, those are the ones that end up going to zero.
And Steve, as a person who there's 2 types of crypto people. There's people that come from finance and there's people that come from code. And sometimes they come from both. But you come from finance, I come from code. Go do a little bit of reading on what they call the Web 3.0. And this is like where Bitcoin was like tier 1, like level 1, like we're on level 3 now, where what we really see in the future happening is Ethereum most likely will become the new internet, and it will take the place of Amazon, web hosting, and it will take the place of some of these server centralized style, web networks. And eventually, hopefully the plan is to become a decentralized internet where there isn't AT&T and Cox and a few other companies projecting the entire internet to the world, where everyone will be part of this distributed model where a node in your living room is no longer your Wi-Fi module. It's part of the network itself. And if you take it down, and the network gets weaker. And if you add more, the network gets stronger. And I recommend you do some reading on Ethereum and the Web 3.0 and how Ethereum is going to become the third tier of the third evolution of the internet, where the first one was the dial-up, and then we moved over to like the Wi-Fi's and the G's, and now we're looking at and then I think that is the true potential value of cryptocurrency, is changing the way we network, not just with people, but the way we connect our infrastructure and our wiring, and everything down to the last T is going to be rebuilt. And in a way where the internet will truly reach its full potential, in the sense where like we are no longer like connecting to a server and then getting a response back. We are literally a web where every strain of silk is connected to the next node, and everyone's getting paid back for their contribution and their bandwidth use and their mining to the next level, where you're not just contributing to the Bitcoin network, you're contributing to the Web 3.0 in different ways, whether it be ads or services or hosting, and you're getting paid back on your return. Look into it. It's a whole new chapter in your crypto education.
So like social mining almost, where the more I value that I or you or person A adds. Of it. Okay, yeah, I follow a little bit.
It's personalization. So yeah, you're getting paid out like the Brave browser scenario. It's also security, like the Tor, and it's also all these things wrapped up into a new version of the internet, where you're basically removing the manual analog input of cash to a vending machine, where now the vending machine and the cash are this one and the same.
Yeah. Life After Google, that book touches on that. The last couple chapters are kind of, the future of the internet, and it's wrapped with cryptocurrency. They talk a lot about Vitalik in the end of that, of like the whole notion of what Ethereum is potentially going to bring to the game as far as the evolution of the internet.
It's cryptocurrency is not a stock trading. It's not a number. It's not a price. It's a whole new mentality of human interaction.
Yeah,
and that's where the value. Like right now, we go on.
Well, I was just going to interject that from my point of view, what cryptocurrency is all about ultimately is data. Fundamentally, blockchain is a database. And cryptocurrencies are just tokens that are operating on top of it. But I've explained to people before that everything is data. So whenever I have a $5 bill in my pocket, that's essentially a pointer, just like in a data. Pointing, they have 5 units of value. And it's also the fact that a $5 bill is in my pocket that says, hey, this person has 5 units to spend, and it belongs to the person whose pocket it's in. But it's an informal database. And what I see, I just attended, Michael and I just left Amazon's machine learning conference in St. Louis, and their computation power. If I want to get on and set up a virtual computer to run my machine learning algorithms, they say that we believe that you should have as many computers as you need, have as large memory as you need, and the exact processing power that you need, no less, no more, for just the right amount of time that you need it. And I envision, instead of AT&T selling me 200 gigabytes of bandwidth a month for this price, that something like what you guys have described, that it's going to be a perfect distribution and allocation of value, whether it be in terms of computational memory or computational power, and that it'll be this economically efficient and transparent interconnected system in general. So there's something called the negawatt revolution, where if you have a solar panel in certain states and you generate
That's literally it.
more electricity than you use, your electricity goes back out. Yeah, it goes back out, and you're compensated for that or given credit.
Electron coin.
It's almost like a consumption tax based model.
Yep.
Yeah.
There's
Exactly.
a coin called
So
Electron that does that same thing.
I just wanted to interject.
That's a great analogy, and that you're so right. It's
well, for me, just to close up, it's all about data representation in an efficient way and tokenization. So we're going to put our our licenses on it. We're going to put our records on it. We're going to put colleges are experimenting putting degrees out on the blockchain. Your house will be a token on the blockchain. etc. Your vote will be.
Man, you guys are still on. This is awesome.
Yeah, I mean, I remember the first blockchain conference I went to a year or two ago. The most revolutionary idea I heard about was how people were putting land deeds on the blockchain, and how this one company who did an experiment in South Africa on land deeds actually reduced violence from warlords in the area, because they found the number one thing that was causing turmoil was the deed, who owns the land. And if the landlord or the warlords can come in and say, hey, I'm going to write you, and I'm going to write you, and I'm going to write you some fake land deeds, and if I give you this and I validate it, now you work for me. Once they took that ability away and they put it back in the hands of the state to determine who owns this land, the warlords in those areas started dispersing because there was no more control over the farms and the lands and everything. And if you can start getting away I think if we, in just a small portion of what we do, can get away from just decouple the money, the US dollar, from a lot of the decision making, especially in the long-term plays. I think, because right now you can make $1 million, $10 million, $100 million off trading, or hey, I got Bitcoin rich and now I'm a millionaire, blah, blah, blah. I think these dollars are going to be pennies compared to the amount of money we could make when crypto starts adopting other industries' market caps that are 100 times larger than the crypto market cap. But all it takes is one big killer app or one killer company to come in from their industry and take the crypto market, and all of a sudden we're going to adopt the entire market cap of some bigger industries. And that's where I think we're going to see exponential value that can be measured on the things we're doing right now.
Yo, Nick, this is Jeremy. I'm back, guys. Sorry, I had to take that investor call.
No worries. How'd it go?
I'll tell you in 1 second, but I have to make a comment on what you just said.
Yeah.
Nick, the way we are going to have an impact in actually making that happen is exactly what I alluded to before. It is taking what is in the 1% in the institutions and the hedge funds that have 20 PhDs on staff and bringing that same level of sophistication and those algorithms to the people so they can make money too. That's how we do it. That's how we redistribute wealth. And yes, maybe we get bought out by one of those guys because they don't want that to happen. But guess what? Now we can move on to the next thing, and we can do the same thing over and over again and help more people. Anyway, with the that was the one comment, and Thomas, I'll let you get to it. You probably know. I was just on the investor call. Long story short, got him up to 250K, and he's waiting for investment docs.
Woo! Keep it up.
So you guys are the first to know.
I love it. I love it.
There we go.
Yeah, that's also an interesting. Thanks. That's an interesting point too. Is distributing the wealth by distributing the knowledge. but the essence of cryptocurrency is distribution to the
wealth
people.
is data. Ultimately, everything is data.
Yeah.
Even wealth. I mean, everything is represented
Just a
by
number.
data.
Yeah.
So
Zeros and
I
ones.
mean, in the fact that I have
That's
a
our
bank,
marketing campaign. You guys just said it. You guys didn't
Data.
even mean to, but you just said it. So you guys said
I'm running with it.
data is wealth, wealth is data, and then Nick, you just said something else that was like accidentally the absolute perfect marketing campaign.
Distribution.
yeah,
Something about
Redistribute the wealth
redistribute the wealth
by
by redistributing the knowledge,
yeah. Well, and this ties into so many things philosophically.
which is
We talk about perfect knowledge of markets, and does the price of equity reflect the current knowledge that's out there in the market? This is what Augur is trying to do with their prediction models.
Yep.
But going back to Ethereum, Jeremy, you should really listen to the second hour of this conversation because it's been mind blowing. It's been deep. FTP.
Really?
Oh
Okay.
yeah, it's been pretty incredible.
Dude, Nick Kearney is next level. Like,
I know,
sometimes you guys
I
are
know
like,
he
you gotta
is.
automate this guy. I gotta run, but I'll give you the stat. Here's your business parts of all the code of what Nick and Thomas really been saying. You take the whole valuation according to CMC, and every single cryptocurrency listed on there is about $250 billion. So I would ask you guys this, and then I got to do the mic drop and go. Would you rather have 34% of Amazon, or would you rather have all of blockchain? You could have all of blockchain or 34% Amazon, and those equal out the same US dollar value. You tell me. That's
Wow.
there's your $255 billion. So I mean that's it. It's 1/3 of Amazon, a little less, 31%.
Shit.
the future of crypto depends on the developers writing applications with useful use cases in real world environments. Without that, it's never gonna.
Well, here's just a basic idea, like of the added value of cryptocurrency. So smart contracts, whether it's on the Ethereum platform or the Cardano platform, from a development technical point of view, I have to side with Cardano. I think it's going to beat out Ethereum. The former founder and CEO of Ethereum, the guy who now, and they're exceptionally well funded, more well funded than Ethereum ever will be in terms of development, but and they're for profit as well. They do very well. So for instance, the smart contracts. But I mean, if you think about the waste and fraud that's associated with the U.S. dollar, it's not associated with the blockchain. The blockchain's a mutable ledger of accounting. But imagine all the value that we put in as a society for one, accountants and trying to audit. Second, enforcing contracts through legal disputes. For the most part, smart contracts has the whatever the added yearly value of lawyers are, and think about the human time that's associated with it. That could largely be eliminated. Auditing and accounting could largely be automated, and we have this immutability associated with it. So right there, just those two things I mentioned, the added value. If we could reduce legal costs, not just in terms of how much we pay lawyers and auditors and accountants, but in terms of the manpower, the intellectual man hours associated with that.
Yeah.
Right there's some added value.
Well, right there.
2.4 pennies to manufacture 1 cent.
That example is so good because I think one of the most useful use cases I see crypto is being able to help the healthcare industry. You see so many people trying to tackle this problem, and basically it's estimated that out of half of all healthcare expenses go to managing logistics of just like mapping. Okay, this customer, they have the proper claim and they're covered for this, so let's send this to the doctor and get the doctors. Just the logistics of approving someone or validating someone's coverage is half of where all the money goes in the industry itself. It doesn't even go to the doctors or the medicine itself or the processes of getting someone into the hospital. It's like just checking, this person has the proper stuff. Okay, cool. Like if you can eliminate all that administration, all that administrative work, that's it's like it's streamlining. You basically
healthcare has a huge data need. It's huge. It's about 65% of all of data science is dedicated to healthcare.
It's unreal.
They barely scratch the surface. Like they're so desperate for a solution like this. It's disgusting.
Hey, Jeremy, real quickly, can you tell me how much money you just raised again?
250.
Ah, nice.
Yeah.
I just wanted to hear
That
it
means
again.
you get to
I might-
stay
I
on
might
for
ask
2
you a
extra
couple
weeks.
times.
I'm just letting you know. That buy you
What?
2 more weeks. So we got to get some more.
Oh, okay, yeah, we definitely do need more.
Hey, guys, I have to run, but it's
Okay, Steve.
always
Thanks.
a pleasure. All right.
I love listening to you, Steve. You're awesome.
I love listening to you guys because I learn more each time. But I got to run. We'll talk soon.
All right, go, man.
Okay.
So, Nick, one of the things too that you're talking about, and this is going to get like touchy feely for a second, but the idea that there are so many people that I kept talking at the conference that, you know, people are just money stupid. They have their heads in the sand. They don't care. But people are also very concerned and nervous about the future as it pertains to artificial intelligence and machine learning and automation, and that it's going to shrink the job force. I think that's another use case for blockchain and cryptocurrency also, is that this is the next generation of jobs and the way to create wealth and make money. You know, it's like everybody that's worried. One of the best examples I can give you is the longshoremen. I live in Long Beach, and they were talking about putting robots on the dock. Instead of having the longshoremen using the forklifts and doing all the stuff, they were going to automate it. And the unions stepped in there like, no, you're not going to get rid of all, like, it's going to dismantle the longshoremen, right? And they're making like $100 an hour. That's a really good job.
Yeah, pretty good. Yeah.
But it's like at the same time, it's like, all right, it's inevitable. It's gonna happen. But it's like, all right, so go read the book Who Moved My Cheese, go get in that fucking maze and go find where the cheese is. You know? And the more that I think the faster that we can figure out how to make people less scared about money and actually want to learn it. I just read something very interesting that Ford, the guy, I can't remember his name, but he said, you know, it's great that people don't understand the banks, because if they did, they would come after us in a second.
Right?
Don't get it. They don't understand.
Why would they though? Like, why would we get it?
Because we're not taught. It's almost like the program is to make us money stupid, and crypto is one of those things that the more people that get into it, the more it's like, whoa, wait a second. There's, you know, you start really understanding the importance of money as a tool, and as it pertains to, again, this early stuff where I'm in it more for the tech. It's going to be great if I do become, you know, very wealthy with my you know, pittance in investments that I've got in the crypto, but to watch the space evolve and to actually be a part of Internet 3.0 gives me goosebumps, dude.
Yeah, me too. Because that's where the true value is.
Absolutely.
And these people are dumb. They don't know. I don't know shit about economic models or the banking system. I know it's probably pretty corrupt, and they're probably taking advantage of my lack of knowledge to do whatever the fuck they want.
Yeah.
And it is cool that I can see a dollar bill, and I don't know what it says when it says one federal note reserved currency. I don't know what that means, but when I look at a Bitcoin and I open up the source code, I see the if statement right there. If this, do that. Cool. Get it.
Isn't that the funniest thing, that it's like this generation of, or this evolution of money comes with a blockchain, open ledger, like everybody transparent, everybody can see what everybody's doing. And another like crazy factoid that I came across, that like I still have a hard time wrapping my head around, the idea that there are more $100 bills in circulation than there are $1 bills.
Yeah.
Because the US dollar is a store of value, and there are safes in other countries that are just full of $100.
But I mean, but also the same thing that excites me about cryptocurrency is the same thing that deters me from actually believing that it will ever take over. And for me, I see crypto as like humanity's last attempt, our last stand against our corporate overlords, our giant government that's grown beyond the initial intent of, you know, what's the point of keeping an armed group of citizens and everything to fight back against our corrupt government if they have giant nukes that we can't fight back at this point with guerrilla warfare or all those things. And so do you really think that the government or the power or the corporate or the Mark Zuckerbergs or the trillion-dollar companies are really going to let us take back control with this new model of independence and freedom and distribution? No, they won't. They're going to buy it all up so it doesn't work, or they're going to shut us down. And that's the tough part. But so when it comes to financially trying to take over the world with or grow our market cap, I just don't see that being realistic, right? But if we take the technical approach and we try to take over via Web 3.0 and we start putting some of our arms and tentacles across the board in the back ends of these softwares, the back ends of their functionalities, that's how we're going to kind of sneak in like more like a rogue and get our stronghold in this world. Because like realistically, the one thing that I see holding crypto back is other big industries being like, yo, just shut the fuck up, sit back down. We're not going to let you grow, right?
Yeah.
That's the only thing that's the only reason why this won't work.
Yep, that's I see that 100%.
Yeah, you know, like why would China let Bitcoin get out even to a point where it has a chance?
Don't get me started with China, because dude, the news this week of how now they're actually kind of touting, oh well, you know, this currency is blockchain, or not blockchain, but cryptocurrencies are anonymous forms of currency.
Bullshit.
That's the whole thing, dude.
You think China's gonna let Zcash step foot in its borders?
No, the whole idea of what they're doing with WeChat right now is so that they can monitor every single transaction like a gum. And it's like, but the government is so like, they keep waving this blockchain flag on their people, and on the other side,
over 90% of transactions done in person in China are done digital. Yeah. Less than 10% remain with physical cash. I'm not even talking about credit cards. I'm talking about through Apple Pay style methods. And then, you know, dude, it's irrelevant what China's saying about Bitcoin, this, Bitcoin that. Like you're literally tear gassing your citizens for wearing masks right now. Yeah. You think anything they're saying is relevant? Like over here in America, we're so desperate to hide what's going on in China that we're throwing up impeachment inquiries and all these things just to keep us distracted from the fact that China is fighting now for our future tomorrow. We don't even know it.
I can't believe that you cannot turn on the news and watch for 3 days and not see one thing about
single fucking thing.
Well, China's
how many of us are libertarian on this call? And I hate to interrupt. I think we have a Scrum meeting where business is conducted in a couple minutes. I don't know if that's happening, but just want to throw that there. Yeah, this is a wonderful libertarian zeitgeist love fest.
Hey, I am as far away from a liberal as I can be.
No, libertarian.
I can't hear everything. All I heard was liberal. What?
I appreciate these.
No, libertarian.
Also, as mind expanding and knowing that I'm not the only person that like kind of has these thoughts, which is amazing. And I'm gonna get back to putting all of our contacts into HubSpot and keep them. So
I gotta go back to my desk. Work.
Day off, so
I'm walking around with headphones and my laptop like in circles, like avoiding people.
All right. Well, guys, have a good day, and we'll be talking.
Well, hey, we have all of these brilliant ideas and speeches on an hour and a half worth of video recording, so we'll be there. Thank you guys.
Yep. Captured. I don't know who owns this meeting, but if you guys, whoever does, share it to the files to the drive. That'd be awesome. I don't know who's got this Genius Wednesday though.
Well, okay. Last note, I don't know who's listening, but if it's on the recording, I'll say it anyways. We were talking about half hour ago, we were talking about monetization methods and who is our target demographic. I don't want us to lose sight of the power of just traffic and having a user base on CoinGenius.ai.
Yeah, hey, thank you about that.
Because
thank you.
Not most people, I would say, don't worry about that. Because like
that could be a couple $1 million in revenue.
Yeah, for us, it's relevant. You know, we have influencers, so we will get traffic.
No, yeah, I definitely think that we need to be working for to get traffic across the website, but also a dedicated YouTube channel.
And when you go to investors and say
Each
you
of those,
have
with enough traffic, that could be $1 million in revenue.
yes, and when you have let's say 100,000 registered users, that's a pretty fucking solid PowerPoint bullet point for investor decks. And
Yep,
okay,
of course.
okay. I gotta get back to work. So
All right, guys.
I'll talk to you guys later.
Bye-bye.
Awesome. Yeah.
Yeah, hey Jeremy, I'm really glad that we have all of that on recording, because you talk about a podcast. I think like our Coin Genius Wednesdays are a little bit unstructured or unfocused at the moment to be too popular. Good content, but not like focused enough. But I think like the stuff that's been talked about the last hour is a lot of people are interested in this type of conversation.
Okay, I'm still here. Sorry, I have another note on that point. And Jeremy, this is more geared towards you, is in regards to the dev roadmap and the media section in general, you know, where I built that mock-up where we have like news, documents, podcasts, videos. Where is that on the roadmap? Is it in the next couple of weeks, or is it not? Because are you there? Are you on the phone, Jeremy? Am I talking to y'all?
Oh, I don't know if he might be on a call or stepped away, but I mean, this is something that I'm very interested in. So I have a background as a writer, and I do a lot of marketing analytics. So I'm extremely interested in generating content.
Are you on a computer? Can I present my screen?
Both in blog, YouTube content. Yeah. So I mean, like, if you have a question, feel free, and I can ask about that, because I'm also interested. Yeah, I'm just interested in our news and content production in general.
Okay, so this is 3 pages that I mocked up about 2 or 3 months ago that haven't gotten built yet. And I actually have a web developer that I work with that does static HTML, JavaScript stuff. And he was going to have this page, which these 3 pages right here, mocked up in HTML, fully built in like 4 or 5 days. And with these 3 these 3 pages right here.
You send screenshots to me or something?
Nope.
Would that be much trouble?
Nope.
I can give you
Here.
my email. Here, I'm going to send it on.
Are you
message
just send me your
chat,
email? Are you in the Zeppelin account? Oh.
No, I'm not. But if you wanted to send me some, what is it?
Add your email to this chat really quick, if you would.
Oh, please. Yeah, this is very sexy. So I've been working. I do the data science, but also I kind of bridge the business operations and the web development and the data science. So I kind of sit at the corner of all of these at the moment.
Well, I really want to get our media section up and running.
No, I do too. And if you're saying that they can deliver quickly, that has my vote, because we've been pretty slow moving lately.
So so here, let me add you to this project. So now you can go in and you can view this project. And I think 1, 2, 3. So I'll move these to the top. Hold on. So these 3 pages right here. Once I have this page built, I can then just use any of these modules and to copy and paste new pages. And my plan is to have 1 page as the home page, which will probably look something like this, which will have a repository of podcasts and categories and different videos, people in which you can click into. And using this template, we can take you to like the video detail page, which is just like the play page. So like if YouTube had like its homepage with all its categories and options and search panels and everything, and then you clicked on like a certain video, it would take you to like its detailed page where it would start to play all this stuff. I see this, I can build this really quick in Stack HTML, where we can go in and just kind of get it up and running, where we have a library of blogs, news, press releases, analytical reports that are just PDFs, different documents, videos, and podcasts, which can just start to be our little archive on the web of shit that people can go and listen to and use.
Yeah, no, I like this a lot. I do.
And so these 3 pages will give it in HTML built out, will give me everything I need to make about 6 or 7 pages, where then we can go in and just copy paste links to YouTube videos, to podcasts that we already have live, to different media asset files, PDF reports, and all the things. Like within 2 weeks, we could have this up on the site live, fully populated with all the content that we already have, because we have a shitload of stuff, right? So I think this is going to be one of the biggest contributions to our SEO and traffic, organic SEO and traffic, not like direct traffic.
No, you're talking my language, my friend. So I'm on our search console. This is something I've been waiting for us to get to the point where we're ready. Hey, real quickly, how long? You said you have a web development guy who could set this up for us.
He's already.
You would prefer to work with.
He's already building it. So in 4 to 5 days, these 3 pages will be built. And
what
then
do you need from Jeremy at the moment?
I mean, if we really wanted to get preemptive working in parallel, we could start compiling all of our digital assets. So we can make, for example, if like you just make a folder on your desktop and then just start putting in all of our MP4s from Coin Genius Wednesdays, and then we make a folder for all of our podcasts. And then we make a folder for all of our press releases. And then I can go in and at first it'd be very manual. It would be hard coded in. There'd be no CMS system, no backend, but it doesn't matter. I can go in and I can populate all these images, all these things with all our PDFs, all our reports. And
Would you need to be put in contact with the current web development team? Do you know who they are?
I talk to them every day.
Oh, okay, so they're aware of this.
Yeah. Well, I'm going to talk to them about it today and make sure they're not working on it already. And I hope they're not. And if they're not, then
I don't think they are.
Yeah, I don't think they are either. Because honestly, this is just we'll be able to take this folder and just put it as a subdirectory in the public HTML FTP of CoinGenius domain, right? And it can just live isolated, standalone from the rest of the site as just a / library, and then all the project assets can be contained on there. And we'll be able to reference it with a redirect or domain DNS link pretty easily. But this is going to be up and running by end of week with each one of these pages: blog, news, press, analytics, documents, videos, podcasts, all running.
This sounds wonderful. No, I mean, I love this. This is something I would greatly support. I guess that my question would be, if Jeremy isn't back on the phone line, like, what do you need from him? Like a go ahead,
well, I haven't really ran this by anyone yet, but I'm sure like you'll be fine. Like, I don't need anything, honestly. All the assets are on LinkedIn.
Okay, so you just need permission to integrate this into the website and to loop the Codistry team in, essentially, something like that.
Yeah, it's like kind of the same way I did the landing page. I mocked up the landing page, and then I had it built by this exact same guy in HTML. He did it. He did it in like 3 days. Then I just was like, "Yo, code history team, go ahead, take this HTML and integrate it." They're like, "Perfect." So I'm doing the exact same thing here. And in like 7 days, there's going to be this whole little mini subdirectory structure is going to be set up. And it's just easy. It takes me literally no time except to write the project documentation. I designed it. I hand it off to my guy. He gives me back all the code perfectly marked up in HTML. And then I'm like, cool.
No, this is wonderful. I'd like to have a conversation about this in terms of like digital marketing strategy and content production. But I mean, I guess Jeremy still isn't on the line. I mean, I can share this with him and talk to him about it.
He's seen all this too, but he doesn't know it's being built.
I think what would be really good is in fact, I'm going to ask him if he can make time to have Christina reach out to you, and let's schedule like a meeting. And, you could like present this in like 15 minutes and just be like, hey, this is what resources we would need to get this integrated into our current website. And then this is about this is what I like to focus on in content production. Like, here's like our first generation, second generation,
Yeah. And we've been through this workflow before.
Who we'll need to hire, or what really put energy into this.
Yeah. It's literally going to take extremely low effort to get this up and running. Like that's like one of my skill sets is I can take complex tasks and figure out how to get them done like relatively quickly, cheaply, and like without overthinking it.
This is impressive, yeah.
And so like when he hands off these 3 HTML files, every element is here. I'll be able to take, okay, I'm going to copy this section into a new page.
Dude, this is sexy.
Yeah. And then it's going to be so much easier.
Yeah, I wish I could have talked to you.
But yeah,
I've been working with a couple of people, dude. They can't hand in any deliverables, and you're over here working independently.
Yeah.
And without direction, this is awesome. Plus, you're talking about landing.
Yeah, I mean, I do web, I do development, I do SEO marketing. Like, this is going to help us dramatically. It's going to be every time the Google bot comes to our site, we have so much fucking content, just backlogged content that I can go and.
Are you on our Google Search Console account?
Or what? No, probably not. I try to avoid anything engineering tech. I'm just doing design and strategy.
Okay.
And when I come across a scenario like this where I know I can have the page built in a couple days for like no money.
So I was just saying that Search Console, you can ask the Google bots to index your page, like if you're waiting for it and stuff like that.
Yeah, I'm pretty familiar with the different micro, like in the access logs and stuff, accessibility. But like literally, like this is going to be huge for our SEO. Like we are going to have new content every fucking day on this thing.
Hey, Jeremy, are you on the phone?
Okay. I think he's on the other call.
Yeah. Oh, okay. I probably need to jump off then. But hey, I'll tell you what. I'm going to bring this up, and I'm going to just ask him, like, when can we schedule a call to talk about this specific?
Yeah.
What you need.
Yeah, and I'm pretty sure it's going to be okay because it's the exact same workflow we used for the landing page. Like I designed it, I had it built in HTML,
I love it.
And
you have my support.
And I handed it off to them, and they were able to edit it, no problem. It was like no friction on the handoff.
Dude, just for SEO purposes.
Oh my god.
Only for SEO purposes. This is
valuable.
Like, if that were the only reason
literally
you got my.
Oh man.
Hey, let me jump off.
Okay, I'll talk to you later.
Let's talk.
Ping me.
Yeah. I will. Thank you.
Okay, my man. I'll see you later.